Live from the Milken Global Conference, this is Balance of Power with Joe Mathieu and Carol Massar.
Live from Los Angeles, welcome to what we tend to call the fastest show in politics, although it's the intersection of politics and finance here at the Milken Global Conference in Los Angeles. Joe Mathieu alongside Carol Massar, the mayor of Milken. I came here just to learn the ropes from you. How are we doing so far?
We're doing really well. I mean, I've got to say, what an event. It is a cross-section of politics, of all the money that flows globally. But we're happening on a day where, again, we're seeing tensions flare in the Middle East. And I've got to say, this is one of the main topics. We saw it up on the big stage already here at Milken. Yeah. Various members from the Middle East talking about what they are seeing. I got to say, what's fascinating is to see this message from folks here from the United States saying, we're with you, which is really interesting. Pretty fascinating. And watching the markets react to the headlines today is creating a pretty interesting backdrop for the conversations that we're having here, typically focused on finance, but you cannot take geopolitics out of finance right now, Carol. Nope. We're going to spend the next 2 hours exploring that. Yeah, you see the equity market coming under pressure. You've seen oil going up. You just said to me, did you see what happened with the 30-year? It's highs for 2026. So 5%. There is nervousness, and you see Wall Street continuing to ratchet down their expectations for Fed moves, Fed cuts. Doesn't look like it's going to happen this year. That's right. Well, we're going to kick things off with Ian Bremmer. I'm glad to say is with us in the flesh here at Milken, following a number of conversations that we're going to bring you through the next couple of days here live from Los Angeles. You want to check with the markets and see how we're doing at first? Charlie Pellet has that for us from World Headquarters in New York. Hey, Charlie.
Hi, thank you very much. And here's what's going on. We begin with the 30-year, 5.02% right now, keeping it all in context. The 10-year, 4.44%, and the 2-year, 3.96%. Major move in crude, as you have been discussing. WTI, 105.60 now. That is a gain of 3.6%. We're looking at Brent above $114 a barrel, up 5.5%. Bottom line here, stocks are falling from all-time highs as oil climbs on concerns that heightened Mideast tensions could threaten a fragile ceasefire. The S&P now at 71.93. The S&P is down 36 points, dropped there of 0.5%. The Dow lower by 455 on the Dow, a drop now of 0.9%. Nasdaq down 123, dropped there of 0.5. And again, we've got the S&P, Nasdaq, and the Nasdaq 100 index all retreating from records. The VIX right now below 19. Again, the 10-year, 4.44%. The 30-year, 5.02%. Gold is down 2%, 45.21 the ounce. And West Texas Intermediate crude, 105.49 a barrel, up by 3.5%. U.S. transportation stocks lower after Amazon launched Amazon Supply Chain Services, extending its freight distribution, fulfillment, and parcel shipping solutions to businesses beyond its marketplace sellers. Shares of UPS, they are plunging 9.8%. FedEx is down 9.7%. And Amazon shares right now pushing higher. We've got Amazon up by about 1%. So again, recapping, the Dow, the S&P, Nasdaq, all trading lower. S&P down 35 to 71.94, drop there of 0.5%. And West Texas Intermediate crude, 105.57 a barrel, up right now by 3.6%. I'm Charlie Pellet, Carol and Joe. That is a Bloomberg Business Flash. All right, got it. Charlie Pellet, thank you so much. We're watching the markets, and as we see Iranian missiles targeting the United Arab Emirates, there's some concerns about that. Tehran warning that it was tightening its grip on the Strait of Hormuz. I mean, Joe, this is, once again, we see this back and forth, and it feels like there's no progress towards an end. It feels pretty hairy, and this comes with this Operation Freedom, I guess it's being called. The president announced over the weekend where we would, in fact, not necessarily start escorting vessels through the Strait, but stand by to help them. There's a question about whether anybody's going to take that opportunity, and it's where we start our conversation with Ian Bremmer. The force behind the Eurasia Group is with us live and in person here at the Milken Conference. It's great to see you. Good to see you guys. And I hope that this set of meetings is going well for you. We would just love to talk about this very delicate moment that we are in and whether the president has the ability to open this corridor in the Strait. And even if he does, could we move enough ships to make a difference? As of right now, he does not. And that is a big part of the problem. This is by far the
biggest challenge we've seen since the ceasefire was announced by President Trump a couple of weeks ago. We now have ships that are being fired on in the Strait, one doing a quick U-turn right after that. No one injured to the best of our knowledge. And then we have what looks to be some interceptions, the UAE Ministry of Defense saying that they had intercepted some shots at them from Iran in the last couple of hours. That is clearly an escalation, a direct response by the Iranian government from Trump's announcement that he was going to have a humanitarian freedom operation to get some of these ships through. The Iranian perspective is we are prepared to talk about ending the blockade if you're going to let our ships through. Otherwise, it's not happening. And the Iranians have the ability and the willingness to prevent Trump from making these moves. This is he's going to be pretty antagonized by this. There's no question in my mind.
Ian, who's got the cards? Who's got the winning hand right now? Or is there a winning hand? Because it doesn't seem like there's really any progress. I mean, Iran understands its power by controlling the Strait of Hormuz. And if it lets that go, then what?
Look, I wouldn't want to be the Iranian regime right now, very clearly. I mean, 150 of their leaders have been killed. So to say they've got the winning hand in that environment, they're desperate, but they're also, their regime is not going to change. More of them can be killed.
Right.
A lot more Iranians have been killed and displaced, by the way, than anyone else in this war. Lebanon's the only other country that's even close. So it's not like the Americans are facing some existential threat. But this was a war the Americans chose to fight, that President Trump chose to fight with Israel. And it turns out that Iran's capacity to cause damage and pain to the Americans is massive. One place the Iranians have an advantage is an information advantage. They know what the polls are in the United States. They know what people inside the Trump administration are saying, and that they're not completely aligned on this. They know the Republicans don't like the war. The U.S. has none of that transparency on what is being said at the top of the IRGC inside Iran, and that is a disadvantage for the United States.
Well, where's our intelligence on that?
Well, there is intelligence, but again, you've killed most of the people you were talking to, right? And the foreign minister who is engaged and still engaged every day by text with Stephen Witkoff, they're still talking, and the sides aren't all that far apart on the nuclear issue, but he's not the guy calling the shots inside Tehran. The people calling the shots are not on television. They're not engaged publicly because they don't want to get killed. So, I mean, it is just a lot harder to get intelligence on what the Iranians are doing and what the Iranians are thinking. And I'll tell you, as many times as I've seen President Trump say, they better watch out or no more Mr. Nice Guy, like when the supreme leaders like kid and father and mother have already been assassinated in this war, no more Mr. Nice Guy doesn't hold a lot of credibility, right? Most Iranians that we've spoken to in Tehran...
But that's nice, what's bad,
exactly.
Right? Exactly.
They think that the war is going to restart imminently. They believe
There was a moment a couple of weeks ago, and you remember this, the markets were lit up with optimism because there was a thought that if we're arguing about duration on stopping enrichment, then we've obviously made progress, that we could somehow get to a yes, that the fact that we were just talking about, is it 5 years, is it 20 years, is it indefinite? That optimism seems to have gone away. Was it ever real to begin with?
It was real. It was real in the sense that there was serious engagement on what not only the duration of enrichment being stopped would be, but also the removal of the uranium stockpiles.
At one point, the president said there was a deal to hand it over.
But what, and to be fair, also the Americans had given up on the ballistic missiles, said that was a regional issue. So that's, if you're not going to have to resolve it, it makes it easier. Not even talking about Iranian support for proxies. So there you've got a deal. But in order to get to that deal, you have to open the strait, and the Iranians, if they're not going to toll anymore, they have to get something. So what are they getting? How are you paying them off? And there we did not see a deal. So ultimately, the Iranians have very little reason to open the strait, which is their their singular point of global leverage, not just versus the U.S., unless they're going to see something that is better for them than the position they're presently in. They don't have that.
All right. So we've been going back and forth. Obviously, the White House thought this was going to be just like Venezuela. It obviously is not.
Yeah.
So do you see an end game, an outcome anytime soon? Because at this point, markets, when you look at oil prices and other factors, they are pricing this out through the end of the year. They've already decided this is nothing that's going to end soon. It hasn't ended soon already. So do you see, Ian, at ultimately some kind of end game here?
The thing that worries me, the reason I don't have an immediate yes for you is that, number one, Trump seems to believe that he's already going to lose midterms. He's already counseling patients. He's saying, I'm surprised that oil prices are below 100. I think that they could be a lot higher. So he's willing to go longer and take that pain. Secondly, the Iranians themselves do seem like they are prepared to continue to hunker down, and they're capable of continuing to hunker down. So it is hard for me to see, even if you were to get to a deal, implementing that deal. So with the international arms the atomic inspectors, no one's engaged with them so far. You'd need them on the ground.
Right.
That would take time. Staging that with the money that the Iranians would have to get, that's a matter at best of another month or two after a deal is in place. So even if you came to yes, and we're not close to yes right now, it would still not be, everything's going through the Strait.
I think it was Darren Woods last week said it would be at least 2 months from the Strait being opened. Also, that it would take that long for the energy market to rationalize itself and get the flows
back. Or longer. If you look at Qatar, we're talking like 3 to 5 years for LNG, right?
Yeah.
So go back to the first Pentagon briefing. Yeah. Pete Hegseth, Dan Kane, it's the new duo. It's turned into a roadshow. The first questions were, was there a plan for the Strait? And he mocked the reporters for asking that. He said, of course we had a plan. What was it?
I think that when you believe that this is going to go over because you're killing the leadership, and so, of course, they see that overwhelming U.S. military capacity that they're going to then want to deal.
It's a big assumption.
It's a big assumption. You don't need that plan. The biggest problem that we have right now as Americans is that President Trump, in my view, is not getting an accurate picture of what's happening on the ground. And the reason for that is because people around him, and not just his domestic advisors, but international leaders too, when they actually talk with him, they sugarcoat it. When they actually talk to him, they're like, sir, you're doing so well, and there's so much of this is going well, and maybe there's this one little thing that if you could just do a little bit different. And they do that in part because he won't tolerate criticism, but also because they want to continue to have access. And they know that if they really say in an unvarnished way.
I mean, let's be real,
and
right?
they want access because other people around them are competing to be the one in front. So if they're the one that's giving Trump the message he doesn't like, they're not going to be there. No one would run a company that way. Right? I mean, you would downgrade that company if you were on Bloomberg.
Yeah.
That's the way the United States government is presently being run in a war environment.
Wow.
And I just think that's horrible.
I think about your concept, your book, G0, right? Yeah. This world, everybody is kind of out for their own.
For themselves,
and we see it when it comes to raw materials, rare earths, commodities. All of a sudden in the markets, we're not talking as much about high tech. We're talking about raw materials, gold, steel. I mean, the world has changed. So does that make that even more difficult to get some kind of resolution? And is this just our world, Ian, going forward?
It makes it more difficult in the region because the most consequential geopolitical impact that has come from this war is that the Emiratis and the Saudis are in much more open hostility. Right? I mean, that's why the UAE decided to leave OPEC in the middle of wartime. It's not like the Strait is suddenly open because they did that.
That was a headline that crossed, and it was like, wait, what?
It's wildly consequential because long term, the UAE is aligned with and supported by Israel. And they cannot tolerate this Islamic Republic in Iran with this level of military capabilities. And they will continue to mow the grass, as the Israelis call it, with Israel going forward if those capabilities exist. The Saudis are not a global node. The Saudis are the regional anchor that's focused on long-term, big, cheap oil production at scale. They've got a much bigger market themselves. They're going to be the regional anchor. They're going to work with Pakistan, which provides nuclear umbrella for Saudi Arabia. They're going to do a deal with the Iranians that Pakistan and China will facilitate. They will find a way to engage. So the day after this war is over, it is a different Middle East. It is a different Gulf.
Is it better or worse? Is it more stable?
It's less stable. It's less stable. It certainly is more aligned with the individual interests of those countries, but you lack the multilateralism. The Gulf Cooperation Council is no longer fit for purpose. It could easily fall apart. And that historically, again, people that are watching the show right now, historically, they would invest in the Gulf. And it wouldn't matter so much if they had their headquarters in Abu Dhabi or Saudi Arabia. That will be massively consequential going forward. There will not be a singular Gulf strategy. You will need to understand how you are engaged with these different leaders, both very strong leaders, and by the way, both generational leaders. So it's not like they're going away anytime soon. This is a very big deal.
You mentioned China, and the role that China is about to play could be significant. President Trump seems to think that there's, I won't call it a long game, but maybe a break glass situation with President Xi. If this is not solved by then, he goes to the meeting with Xi Jinping and they work this out together. Is he the linchpin to getting to Iran and getting this straight and reopened?
Send us pandas. It's got to be good.
It's good to have pandas. I like pandas. And also the fact is that this summit is going forward even with the strait still closed. And at the same time, the U.S. has put in principle sanctions against Chinese teapot refineries that are not linked into the broader financial system. And the Chinese, in return, have said, okay, if you actually do that, these companies will have the right to go after any American company doing business in China to receive the money that they've lost. Now, the fact that China is willing to hit back like that right before a summit with Trump shows that not only are they confident, they know that the Americans are not going to take moves against them. They know that they're not really under pressure to resolve anything. So I think the meeting will go well. I think they will show respect for each other. I think, Xi Jinping will try to see if he can get Trump to say something useful on opposing Taiwan independence, which Xi wants and no one around Trump wants to see. But one-on-one, Trump might say that. But this is not going to be. If you're waiting for a Xi Jinping summit to be a breakthrough on the Strait of Hormuz, they want none of that.
Is the president not thinking that? The way he's been talking recently makes you wonder.
The way he's been talking recently makes you wonder about many things.
Okay.
No, I mean, pick the tweet and tell me which bit you want to focus on, and then we'll wonder about a different thing.
If only we had that much time.
No, but the point is he's frustrated.
Yeah.
He's angry. Yeah. He wants an off-ramp. He'd like to blame someone. It is his fault, and he can't do anything about it. That's an unusual situation for him.
Ian, I've got to ask you, I was talking with an Iranian yesterday who's been in this country for a long time, but he said Iran really wants to be actually friends with the United States rather than China. And I think about that China-Iran-Russia alliance. That's an interesting one. Do you feel that that's possible?
The Islamic Republic? No, of course not. Look, I think I was listening to NPR briefly this morning. I was listening to NPR briefly this morning, and it bothered me that after 5 minutes of this interview, which was wildly disconnected from what was happening on the ground, people that would listen to this person who used to be in the U.S. administration, in the Treasury Department, I don't know the name, and now is in some think tank in Washington, but was not introduced as an Iranian American who just desperately wants the regime to collapse and will say anything in service of that. Now, that is a legitimate perspective for a person to have, but the people listening don't necessarily know that that is the perspective of that person. And look, I would love to see the regime collapse. It's a brutal, horrible regime. It's killed lots of its own people. Yeah. But what I want is not analysis, right? Yeah. What I want is not what's going to happen.
All I know is, man, just when I think it could get easier, it's not. It just gets more complicated. You create some sanity for us on this situation. Thank you. We'll be back in a moment. This is Milken.
This is Balance of Power with Joe Mathieu and Carol Massar, live from the Milken Global Conference on Bloomberg Radio and Television.
Yes, indeed, everybody. I'm Carol Massar along with Joe Mathieu. We are live at the Milken Institute Global Conference in its 29th year. And what's really wonderful about this event, as you are finding out, it's this great cross-section, as we said, of financial folks. It is folks in wellness, healthcare, folks in politics, but it's also from the world of academia. And as we know, over the last couple of years, there's been a lot going on and tensions on campuses that we've been trying to figure out.
Absolutely. Not to mention just a question of how do you value a liberal arts education? What's the return on investment? What is it that young people are looking for now? And that's been kind of a moving ball that we're trying to follow here. But to your point, just walking through the halls here, you know, it's Congress is on recess. Half of Washington is here, which is why I ended up out here. And certainly the financial world is on the ground. The impact or sort of the influence of academia here, though, is something that we want to explore because just consider the opportunities and the people who are here right now.
Yeah, and we also have an administration that has very much looked at the country's universities in a big way over the last year or so. Sian Beilock is with us. She's the president of Dartmouth University. Prior to that, she was head of my alma mater, Barnard College. So I am delighted to have you here. I was so sad when you left. How are you?
I'm good. I'm just finishing my third year at Dartmouth.
Congratulations.
Thank you. It's been a busy 3 years. And actually, in my third year, I'm now one of the longest serving Ivy presidents. So that's been interesting.
Yeah, that's pretty amazing in terms of you're also the first female president of Dartmouth. I want to ask you first about the White House turning a big spotlight on academia here in the United States. How are you thinking about that? Because my feeling for colleges and university, it's a place for kids to say stupid things and make mistakes and learn. And I feel like we can't do that anymore. But tell me, you've had to deal with it firsthand.
Yeah, I mean, first, I live by my values and the values of the institution, regardless of who is in office. And we've been very clear at Dartmouth about what we are. We're an educational institution. We're not a political institution, and we're not an advocacy organization. And when you're clear about what you do, that you're teaching students how to think, not what to think, and that free expression is very important, but there are boundary conditions, it makes it easier to do your job. And we have been one of the few Ivy League universities not under federal investigation by either the Biden administration or the Trump administration. And I think it's because we're focused on our mission.
Mm-hmm. Has there been a corrosive effect of the Biden administration or the Trump administration, focus on academia, not to mention the greater Republican approach to anti-Semitism on campus that we saw during the Biden administration? Has there been a chilling effect for students?
What I am interested in is making sure that people can express their views regardless of their background, but that we're not spewing hate, right? I think that's really important. And so we're very clear. You can protest outside my office, but you cannot disrupt others. That's robbing someone else of free expression. You can protest a speaker, but you can't set up an encampment, take over a shared part of space, and declare it for one ideology. And so at Dartmouth, we have very expansive free expression policies, but we're willing to call balls and strikes. And what we're seeing on our campus is amazing dialogue. We started after October 7th something called Dartmouth Dialogues, where our faculty in Jewish studies and Middle Eastern studies actually were willing to get together and have open panels and dialogues. And they modeled what it was like for students. And I will say now that 85% of our students on campus feel like they can speak their mind in a respectful way. And I'm very proud of that.
All right. I want to ask you, I want to do a little Bloomberg-esque question because we've been talking a lot about endowments and being taxed. And I'm curious if you guys are changing any of your investment strategy, and tell me about the tax rate. Is it changing for you guys?
It is changing for us, and we spent
up to 4%?
Yes, we'll be at 4%. We spent a lot of time in D.C. and Congress talking about how we don't think this is an effective way to have an impact on universities. Our endowment funds financial aid. At Dartmouth, if you make up to $175,000 a year, free tuition. Over half of our students are on need-based financial aid, and the average grant we give to a student is $71,000 a year. It's actually cheaper to go to Dartmouth as a lower middle-class student now than it was 10 years ago, and cheaper than many of the public schools. And we pay for that because our alumni and parents generously donate to an endowment that allows us to support financial aid. Our students also come out without loans. We don't do loans. That $71,000 a year, the average aid is all grants. Our goal is to send students out into the world to go out and lead our democracy and not be saddled by debt. And taxing the endowment really hurts lower and middle income students who otherwise would have the resources to be at a place like Dartmouth.
And I should point out, you're going from 1.4% to 4%, right? Yes. That's a big jump.
It is a big jump, and it directly impacts our ability to do the things that we want to do. And look, I think that American higher education institutions and elite higher ed are so important to our country. I think we have a trust problem, and it's our responsibility as presidents to bring that back. But supporting what we do in terms of educating the most promising students should be first and foremost.
Where's the demand equation right now? And is the narrative true that parents are more skeptical, that kids are not looking for four-year degrees as often, that the tuition at the elite colleges has changed the dynamic? How about on your campus?
Yeah, well, I mean, Dartmouth is an Ivy League university, and we have far more applicants than we have spots. In fact, we had about 30,000 applications for 1,200 spots this year.
Wow.
And our applications have gone up. We are seeing students who want to be on campuses where there's dialogue, where we're fighting polarization, where they can hear speakers of different views. We're seeing that come to our campus. But it is true that only about 60% of students graduate from four-year colleges. That's a problem. It's not true at Dartmouth. We have a 98% graduation rate, but this is something as a sector we have to take responsibility for.
Sian, they're going to yell at me, but 30 seconds. AI, jobs, are students freaking out?
Students are worried. Dartmouth actually developed the term artificial intelligence in 1956 in a conference. And we're celebrating the 70th anniversary. But our goal is to teach students to be human with the technology, and that's where I think a liberal arts education comes in. Those face-to-face dialogues, ethical discernment, those are the things that are going to create the next generation of leaders, and I think a place like Dartmouth is even more important than ever to do that.
Sian, thank you so much. Sian Beilock, of course, president of Dartmouth. Come back soon.
Great conversation, and thank you for being with us. We've got another great one on the way in Bill Ackman. You want to stay right here. Let's check the markets first with Charlie Pellet in New York. Charlie.
Hey, thank you very much, Joe Mathieu. Lower across the board right now. Oil is higher. We've also got the 30-year above 5%. We begin with the equity market. The Dow, the S&P, NASDAQ, all declining. Stocks, in fact, falling from records as oil advances on concerns that heightened Middle East tensions could threaten a fragile ceasefire, keeping energy costs elevated while fueling inflation risks. The S&P now at 7193. To be clear, we're retreating from a record on Friday, down 36 now, down 0.5%. The Dow down 479. Dow is down 1%. NASDAQ lower by 0.5%. The NASDAQ Composite Index at 25,000 even. Right now, we've got NASDAQ down 113 points. The NASDAQ 100 Index lower by 109 points. NASDAQ is down 0.4%. And the Russell 2000 Index of small cap shares slumping now by 0.8%. Our Mag 7 Index down 0.4%. And the SOX is tumbling by 0.9%. All of this with the VIX, the fear gauge, just below 19. The 10-year, 4.45%, the 2-year, 3.97%, and the 30-year above 5%, 5.02% right now on the 30-year. Spot gold is down 2.2%, an ounce of the precious metal now at $45.14. Silver is down 3.1%, $73.08 the ounce. Crude, major story there, trading back above $105 a barrel on West Texas Intermediate crude. WTI up 3.6%. Barrel of Brent above $114. Brent crude right now up by 5.9%. And Bitcoin breaking out back above $80,000, $80,169 on Bitcoin. Bitcoin right now up by about 1.6%. GameStop shares are plunging 8.2%. GameStop is proposing to buy eBay for about $56 billion in cash and stock. A bold attempt by Ryan Cohen to take over a storied e-commerce name several times larger. The gaming retail chain is offering $125 a share in cash and stock for the online marketplace. That's roughly a 20% premium to its Friday close. To keep that in context, eBay right now, $109.19. eBay shares are advancing by 4.9%, but GameStop is plunging now by 8.3%. Cruise line earnings, we heard from Norwegian this morning. Norwegian tumbling after the cruise line operator slashed its annual forecast. NCLH on the ticker. Norwegian down 8.8%. Royal Caribbean down 2.7%. Carnival Corp lower by 4.1%. Recapping, S&P 500 index down 34, drop there of 0.5%. I'm Charlie Pellet. Carol and Joe, back we go to the Milken conference. That is a Bloomberg Business Flash.
Welcome to Bloomberg's coverage of the Global Milken Conference. I'm Danny Berger, alongside Bill Ackman, the founder and CEO of Pershing Square. Bill, thank you so much for sitting down.
Of course.
I mean, you got to be the most busy man on Wall Street right now. It's just compiling a list of what you're currently working on. You have 2 publicly traded equity funds now, a publicly traded asset manager, a publicly traded real estate company that you're working into transforming a mini Berkshire Hathaway, and you're running a campaign with Universal Music Group. Where's your attention most focused on right now?
On investing. They're all related. They're all correlated. They're all part of one very small portfolio, which is why it's possible.
It is possible, and I know you run with a slim team there, so it's always impressive. And you got this IPO out last week, and we talked about it, but we talked before it started to trade. I know you don't concern yourself with a day's worth of trade or a few days, but what do you make of the reception that it got, that it did fall considerably? Is this an issue with bankers mispricing it?
No, I mean, we sold a pile of cash. I don't know why anyone would buy a pile of cash and then the next day sell it at a discount. What I think I didn't appreciate when we last spoke is we did something different in this offering that people don't normally do. Normally, retail investors get kind of a very small allocation, and they're disappointed by the shares they get in an IPO. In our case, we gave the retail investors what they asked for, and we cut the institutions back. And I think the impact of that was retail investors woke up with more shares than they had intended to buy, and were put in kind of a forced selling position, and that has to work its way through. I think once that's done, I mean, now, again, the package of securities is modestly down from where we priced the offering. Remember, you get an interest in a TSUS, which is you think of it as an investment holding company, you can think of it as a closed-end fund. There you're getting $49 in cash that we're in the process of deploying in the market. And you get an interest in our business, which is a very good business. It's a bit like a Blackstone or a KKR, but some important differences. Substantially all of our assets are in these sort of permanent capital vehicles. And so the business model itself is like owning a royalty on compounding. And so that's why all I have to do is focus on generating returns. I generate returns. That generates an increase in our assets. That generates more cash flow for the business. And it's a bit of a self-fulfilling prophecy as long as we do a good job allocating the money.
One of the things that's different, and I kind of hinted at this at the beginning from the other big publicly traded asset managers, is just how slim you are. And this was brought up actually in one analysis of Pershing Square.
I like being slim.
I think we all do. I think, especially in this day and age. But this idea that there is key man risk, because so much of it is your ideas and your ability to fundraise.
It's not true.
So talk about that. How do you mitigate it?
I actually think we have the least key man risk of any hedge fund in the world. And that sounds surprising because usually you put me on I do more TV appearances than other Pershing Square employees. But what causes a hedge fund to go out of business is something happens to a key person. And then investors, the first thing they do is they ask for their money back. And then the assets shrink and the rest of the team leaves. In our case, the assets are in these public corporations where the money can't leave. And so if something happened to me, the money stays. If the assets stay, the team stays. The team owns, 45% of the business, right? So the company of equity is widely spread throughout the firm. And it's unusually about our firm, in an industry where there's a lot of turnover, there hasn't been a Pershing Square. So my CIO, Ryan Israel, and I, we've worked together now 17 years. He's been CIO for almost 4. If I disappeared tomorrow, nothing would really change. In the early days of Pershing Square, I generated most of the ideas, and I worked with analysts on analyzing those ideas. Today, I'm generating a minority of the ideas. So I'm not saying I'm unimportant. Hopefully, I can still, generate value for the firm. But the firm itself is very robust. It's the only firm in the world that if something happened to all of the employees, because the assets are forever, the board would just hire a new team or put the assets in an index fund, and you'd still build a very valuable, kind of business over time. So it's one of the most robust businesses in the world, and it's one of the highest quality businesses in the world.
By the way, just kind of on a similar note, as a Warren Buffett fan, this past weekend was the first Berkshire Hathaway annual meeting where Abel was at the helm. You're obviously a young man, but have you thought at all about setting up succession, what that eventually looks like at Pershing?
Well, I think it's really effectively set up. Identified as CIO, Ryan, as I mentioned. He's really leading the investment team at this point. Ben Hakim, president of the firm, he kind of runs everything other than the investment side of the operation. It's amazing there's anything for me to do. I have the privilege of thinking about big ideas, and occasionally a big idea drives some value.
Can we talk about one of those big ideas?
Sure.
In Universal Music Group?
Yeah.
You come forward with an offer to buy this company, and a lot of people scratch their heads. Why would you do this with a company that has very large majority shareholders, where it's tough to put through? What is the game plan?
Actually, the game plan there is absolutely we need the support of Bolloré Group, but what we're proposing, I think, is very much aligned with what they're interested in. I mean, Universal is sort of interesting case of a company that's done well in its core business, right? Universal remains the dominant company in the recorded music industry. They remain very close to being the number one company in the music publishing industry. It's done a very good job with that. But they've not sort of graduated from operating like a private company into being a public company. And they've lost, I would say, the confidence of kind of the shareholders and the analyst community, which is why the stock, the business value has grown and the multiple that people assign to the earnings of the company has declined. And the result is a stock that trades at the same price it traded, the company first day of trading was 25 euros, and this is in September of 21. Here we are almost 5 years later. The stock is 19 euros, 18 euros. So that's not a good performance. The company really needs a reset. It's also listed really in the wrong exchange. It's really a U.S. Company. So our transaction moves the company from Amsterdam to a U.S. listing. That alone is meaningfully value creating. We kind of recast the balance sheet. The company has unmonetized assets on the balance sheet. Their stake in Spotify. Now, notably, the company announced in the last couple of days that they're going to sell half their interest in Spotify. We think they should sell the balance. The company announced a more aggressive buyback program. We think there's an opportunity to do more. But our transaction effectively enables a cancellation of about 17% of the outstanding shares, a migration of the company here, a new board of the directors led by Mike Ovitz. Mike, I've known a very long time. I think he can be a very value-added to the operations of the company, and then just a better program in terms of how the company communicates with shareholders. The company right now is sort of analyzing the proposal. We'll hear back from them soon. We've been engaged with obviously the big shareholders.
And you're hopeful that they will be receptive to this?
I mean, the company has to do something. This is a very good solution to the various issues that confront the company.
By the way, on this idea of European versus U.S. exchanges, it feels like that is something that a lot of companies see that they can unlock, that they move to a U.S. exchange. On the day we talked, for example, I had the AstraZeneca CFO, and they did something similar. And does Europe have a real problem, Bill?
I mean, yes. Look, the exchanges are natural monopolies. And, if you're not listed in a market which has the most demand, your cost of capital is going to be higher than it should be. And so there's and I think, Europe has too many exchanges. If I were in charge of Europe, I would consolidate the London Stock Exchange, Euronext, kind of bring the various exchanges, because again, it's a natural monopoly and you want the maximum liquidity and demand in one place. But there's sort of nationalism, I think, prevents that.
One of the kind of newer features of markets is the prevalence and the explosion of betting markets. And there's been this real criticism that we're seeing almost a casinofication of the world, where you can bet on anything. There are ETFs listing this week where you can bet on whether the Dems or the Republicans are going to be winning the House or the Senate. Is it a problem? Does this concern you at all, this trend?
I think the negative is that there's a positive and a negative. I think the negative is it's not the most productive activity in the world, and there is a lot of gambling that goes on, whether it's sports betting or otherwise. And there are people, and particularly young people, losing money they can't afford to lose, betting on the outcome of things that are difficult to predict. So that's obviously the unfortunate. It's a bit like lottery tickets. It's a net loss, I think, for society. On the positive side, what betting markets allow is they allow people to hedge risks that they're exposed to. It also creates information. Looking at where things are priced. The betting markets have done a better job of predicting outcomes of elections.
Some could say because, well, maybe not elections, but there's more insider trading, that incentives exist for that to happen.
Yeah, look, the people make arguments that the insider trading should not be illegal, because that would bring a sort of more transparency.
Are you one of those people that believe that?
I'm not, but you can make some arguments for it. So I think it's sort of interesting. But the more the market becomes casino-like, I think the risk is, I guess, people they withdraw capital because they lose confidence.
Right.
I think markets are becoming more and more short-term. And if you think about what a stock market is, these are very long-term assets. So the short-termism drives liquidity, which I think on the margin is a positive. But it also can lead to short-termism in the way businesses are run.
Bill, I would love to just leave on the note of your hometown city, New York. There's been a lot of discussion about Mayor Mamdani making very public pronouncements against specific people, against Ken Griffin, announcing a pied-à-terre tax, directly attacking some of the business leaders of this city. I know you were concerned heading into this election and the outcome of it too. How are you feeling now?
Not great about things. I mean, I think Mamdani is not. If your goal is to make New York City kind of financially solvent, What you don't want to do is drive out the Ken Griffins of the world, right? Ken brings very valuable business. That's, it's a $6 billion project, which will generate, thousands of construction jobs, architecture jobs, marketing jobs, make your list. Employees who will pay material amounts of taxes because they're highly compensated employees. And it's sort of the Wall Street and the tax revenues from Wall Street are what enable New York City, kind of all the people in New York City to have a better life. Right. And if you drive out the Ken Griffins of the world, who notably, has made a major contribution to New York, not just from bringing his business there, but he's been very philanthropic, a $400 million donation to Memorial Sloan Kettering, which is an institution that doesn't just help New Yorkers, it helps people with cancer all over the world to go to get treated there. So it's not a very smart approach.
By the way, I can't think about Pershing Square without thinking about New York City, but could you ever see yourself being driven out of New York?
I think it's unlikely. I'm more the kind of guy to fight to make sure New York City is a great city than someone who's going to leave.
The problem is, though, that with these policies, even if they have dire economic consequences, Mamdani is incredibly popular, and he's still very popular with his base. So how do things change then? How do you fight this tide if there still is this broad-based popular support for these types of ideas?
It's an issue. I mean, I think the answer is a better candidate look, where Mamdani was correct is that New York is not a very affordable place to live. But you're not going to make it more affordable by getting rid of the biggest drivers of tax revenues for the city. Mamdani already has a budget crisis. Well, we got to figure out how to run New York City much more efficiently. But when you raise taxes, the most mobile people, frankly, are the Ken Griffins of the world. Ken can choose to locate his business wherever he wants. And he can locate his pied-à-terre wherever he wants.
Very true. Though we are heading into midterms, and again, affordability is on the ticket, and that's pushed a lot of people left. Are you worried about how this shakes out, that we might get more candidates who want to put forward these types of ideas into economic policy?
Yeah, look, I think you look at a country like Argentina and how far it fell, right? One of the most Argentinian GDP, 100 years ago, was one of the most significant countries in the world and fell off the map because of socialism and other bad policies. Now you see Milei coming back and the country dramatically recovering. It's sort of a great example. And it's crazy to me that socialist ideas can travel into a country like this one.
I have only about 30 seconds, but I'd be remiss if I didn't ask about some of the work that you've been doing trying to make 401ks, those types of investment vehicles, more broadly accessible. We had an executive action last week. What are you pushing for at this moment?
I think every American has to own a piece of capitalism. And when you do, you're excited when the stock market goes up, and it allows you, power of compounding allows you to save for your retirement. Unfortunately, wages cannot compound as fast as the stock market. And so I think it's very important for every American to participate in capitalism, or we'll end up in socialism. And that's, so I think the president's plan is a great one. You have to be able to, I think if you believe that you're going to be able to retire comfortably, maybe even leave something for your kids so they got a head start, that makes you believe in the country. And if you can't, it makes you angry. So I think a very important program. We're
going to have to end it there. Thank you so much for joining. Really appreciate your time. With that, we'll toss it back to New York. That is, of course, Bill Ackman, the founder and CEO of Pershing Square.
Here at the Milken Global Conference in Los Angeles, they collide in a fascinating way today.
Absolutely. It's something we know so well at Bloomberg. It's always about follow the money. Money intersects with everything, markets, economy, and certainly all different kinds of worlds. And the business leaders are certainly watching right now what's going on in the Middle East, the tensions, the uncertainty. It makes it tough to kind of figure out strategy.
You make a great point, though. It's a moment that is made for Bloomberg. When we consider what we talk about and cover every day, it's all together in one here. And it's a great opportunity to bring John Denton back into the conversation. The International Chamber of Commerce Secretary General is with us now live in Los Angeles. Great to have you back on Bloomberg TV and radio.
Great to be here.
What do you make of this different flavor at Milken this year? There's an urgency, there's an uncertainty that you might not normally find at this conference.
Well, yeah, I've been honored to speak at Milken before, and there's definitely a different tone and a level of urgency. And actually, I must say, as you said, Milken's actually a very important conference now on a global basis. The reason I come here, and frankly, I don't go to Davos, I actually come here now because Because you think about some of the biggest challenges we're confronting are going to require the private sector to really step up. And what we see here is probably the biggest gathering of private capital, which will actually be incredibly important if we're ever going to align to fix some of the problems we've got, just at a global macro sense. You said geopolitics, it's really a geoeconomic environment we're in now, where the economics become so much more important. I mean, I'm working on the Strait of Hormuz at the moment, because one of the issues there, and I think people are starting to realize that, the Strait of Hormuz is actually not just a combatants between the US and Iran. It's also framed very much in oil and gas, but people are forgetting or not seeing yet, which is one of the most important elements, is a crisis which is emerging around access to fertilizer. Now, we're in 170 countries, I think, as we've discussed before, and we see very quickly in the real economy the impact of an access issue. So we've got not just a pricing issue, so a pricing cost issue, we've also got a challenge to actually get access to the product itself. So you've got the combination of a price shock and a supply shock, which is about to create a huge cataclysmic problem in the real economy, but in particular on food. And we saw this with the Black Sea, because we developed the Black Sea Agreement for the UN Secretary General, and we see similarities there. Because food pricing, the access to food, the inability to feed yourself, that's what gave rise to the Arab Spring. That's actually what causes political instability. So, as you say, this is not just an important conference. There's a series of important conversations, but there's an urgency about kind of getting some of these issues better understood. And the private sector understands these issues sometimes a lot better than the policymakers themselves.
John, I feel like there's something going on. You talk about this moment in time for Milken, but go back to the Russian invasion into Ukraine and the breadbasket to the world. And we saw grain prices certainly impacted. Go back to COVID. And, we didn't have masks. We didn't have a lot of supplies, things that Americans took for granted. We're all looking at our supply chains, and it does feel like there's each country on a grab to make sure that they have what they need. That's got to create just a different market environment, a different economic environment going forward. And we talk about inflation, prices, things are going to be more expensive going forward.
Well, I mean, what you articulate then can be wrapped up in one concept. It's the level of uncertainty, which is actually really compounding. I think we talked about this before. The uncertainty that business finds, and not just in the US, but on a global basis. As I said, we're everywhere. We're seeing a level of inhibition towards engaging in commerce across borders because people just don't know what the rules are. There's no policy settings. And then you've got the complication, I think, of the geopolitical side feeding into the geoeconomic side where, the disputes. Where's the multilateral system? Where are the institutions that are actually supposed to be able to be used here in these environments? So it's not clear to people. We actually did an economic...
Where are they? Why aren't they working? Why isn't there that respect anymore?
In the end, one of the challenges for the institution is actually the willingness of their member states to do something. I was just in Yaoundé at the WTO ministerial meeting, and if there's one takeaway from that, is that the idea of consensus-based multilateralism is over. What you're going to see much more is coalitions of the willing, plurilaterals, these sorts of issues, because you do not have alignment between a lot of the major players. And that is a problem, and that actually makes it very difficult for the institutions to function. The institutions have got a lot to answer for anyway, because in many respects they've failed, I'd use this term, to allow the spirit of modernity to flow through them to actually move forward. And it's actually, they're stuck.
We've seen that in the U.S., right? We talk about this K-shaped economy, and we have guests who come on and say, well, look at the market. It's record after record. Well, there's a half of Americans who are not necessarily feeling that
There's detachment
benefit
between the market and the real economy.
Exactly.
And what I was describing, consequences of the Strait of Hormuz, these are real economy issues. These are not market issues. So ultimately, we need to work out a way to get the fertilizer flowing again. We've already lost capacity, and that capacity is meaning that farmers in Africa and Latin America, because they couldn't get access to fertilizer or the price of it was too high, what are they doing? They're actually replanting without fertilizer or not planting, which means yields are going to suffer quite dramatically. And we see that coming in 3 months. And it's unusual because, in a way, we see it coming, but it's shrouded by the oil and gas story and shrouded by the battle between the combatants.
We have to wrap. This is not fair. I don't want to. John Denton, you rock. So the Milken annual big conference. I want to just pull your attention to something I read on Bloomberg Opinion. It's from David Drucker, and he says, Speaker Mike Johnson barely maintaining control of the GOP conference in the House of Representatives amid a midterm election cyclone. There's a lot of politicians talking about that. I'm curious to see what our next guest, Joe, has to say about that.
Well, that's right. I mean, it has been rather chaotic in the House, although they passed a bunch of bills before they left for recess. They got FISA done. They got the DHS bill done. They even got a farm bill done. Question is, when they come back, what will happen? And the Senate might not agree with anything going on in the House. So we do turn, though, to geopolitics as our guide today, with the news from the Middle East driving so many conversations here at Milken, including this next one with Daniel Tannebaum. Partner Oliver Wyman, senior fellow at the Atlantic Council, is with us in person. Always great to see you in the flesh, and I hope that your Milken is going well. When I say that, this is your Milken this year. Your purview is the leading conversation.
I feel a lot more popular this year than I have. Usually I'm the guy who no one wants to talk to at this event because it's pouring cold water. It's unavoidable. This is the first time.
Well, we're swimming in cold water right now.
This is my fourth Milken. This is the first time that people just can't avoid the topic. Every session I've been in so far, that's really dominated discussion.
I haven't talked private credit yet here at Milken, which is fascinating
it's actually pretty wild when you think about that. Yeah.
But you had the head of a Middle East sovereign wealth fund just on stage while there were missile warnings in Dubai and Abu Dhabi at the moment. It really brings home what's happening right now.
What is happening in your view?
I think there's a lot. I mean, we have so many different crises. You have the situation in Iran that doesn't seem near resolution, although where it's drifting seems to be where the U.S. and the members of the Security Council were with Iran in 2015 under President Obama. We're kind of going back to this, except with an Iran that now has a newfound leverage they never knew they had. And people remember this morning in a session I was in, the war still going on in Ukraine after 4 years. You have U.S.-China relations with Trump visiting Xi next week and the détente there. And companies are just trying to grapple with what's happening, and some are better at this than others.
So is this a combustible moment, or could we be on the threshold of peace? When you listen to the president, we could be ready to sign a deal at any given moment.
Sure. He has said that.
Say that sure again, because I wasn't so sure. I'm sure you weren't so sure about that sure.
Looking at what the Iranians are saying, I mean, the Iranians have proposed a response that does sound very similar to the JCPOA, the 2015 deal that Trump abandoned in 2018.
So do we simply just rewrite that deal and go back to the one he threw away?
We did it with NAFTA in the last administration. We're about to do it with USMCA, so it wouldn't be entirely shocking. The problem there is Iran never realized it could close the Strait of Hormuz. They never shot at Gulf neighbors. So this is a different Iran than we're dealing with, and there is no opposition. So unlike in Venezuela, where there was a potential opportunity to put an opposition leader in place, the last time opposition forces rose up, there were 30 to 40,000 innocents killed by the Iranian government when they protested.
It's an Iran that's holding off the biggest economy in the world, the global leader, the United States. What does that say?
It says that the state of warfare has fundamentally changed at this point, because you're not talking about a massive military up against the U.S. government. You're talking about a military that's been preparing for this moment for 47 years, but using drones, using mines, using much more smaller elements of kinetic warfare than what the U.S. is really prepared for. And so that is changing the situation. The problem there is I also don't think we've really seen the spillover, what the fallout has been on the markets. Obviously, I think that we're not seeing a reality in terms of what trading is doing relative to what's happening in the world. And I think that's because the real tangible impact hasn't been felt yet.
Yeah. Do leaders understand that disconnect? Do business leaders who are maybe watching their share price go higher and higher saying everything's just fine?
I think business leaders are trading on that hope right now. I mean, obviously, if you really traded on the vibes of the world, I think the market would be going nothing but down.
Right.
But no one wants to do that. They want to continue to try and find capital to make money, to profit. I do think you can't look at the market as any proxy for what's happening right now, which is the challenge.
Opportunities are being created here, and I go back to something that Carol mentioned earlier this hour. Remember, you talked about every country having its own grab right now. When it comes to the geopolitics of supply, following years of underinvestment, this is a moneymaker for a lot of governments and for a lot of providers.
I mean, you're seeing the Office of Strategic Capital within the Department of Defense investing billions in terms of trying to shore up its domestic base. Other nations have already done this. Deals are being struck with nations that hadn't historically traded to try and manage this supply chain risk, to try and manage the resilience of their supply chains. I mean, we're in kind of the first innings of this, but that is the future right now as countries try to find that resilience where we learned about disruption during COVID, exacerbated through the crisis in Ukraine, and now certainly what we're seeing with the Strait of Hormuz blocked and the net impact there.
So good for business, but not good for people. You know, I keep thinking, Dan, about the amount of money, the budget that President Trump wants for military spending. But Europe, we're seeing also beef up their defense spending. Great for defense contractors, defense makers. But what happens, that trade-off between guns and butter? I think about what does that mean for society? Cuts in certainly the U.S. government, other departments, right? Sure. Just tremendous.
I mean, there's going to have to be a give and take here. But yes, the president's budget request for defense sector is massive. And this is a person who ran on affordability, which obviously we're seeing issues with at the moment. And we'll continue to see those issues in the coming weeks and months, even after this crisis resolves.
That's the issue here, right? This crisis resolves today. How long does it take for the energy market to rationalize itself?
I'm not an energy expert, but the knock-on effect, I mean, you only saw oil deliveries begin getting missed about a week and a half, 2 weeks ago. So like that flow-through hasn't really happened in terms of the price increases of the increased fuel costs, what that ultimately does as it cascades through a consumer ecosystem. We haven't totally seen that realized yet. And obviously some companies are absorbing some of this just like they did post-Liberation Day, but we're not done yet.
30 seconds. What's the number one question you're getting here at Milken?
I mean, what do we do about this as companies? Most of my larger clients have heads of government relations that are double-hatting as a head of geopolitical risk. And I think finding a resilience in companies to build infrastructure to try and get ahead of these issues a bit more, that's really what I'm seeing the demand for, is how do we systematize decision-making around geopolitical threats? Because right now, it's kind of someone side of the desking it and largely reacting.
Interesting. Mr. Tannebaum, thank you. Great to see you here
thank you.
at Milken. An important conversation. We're going to put an ear on another conversation that's happening behind these walls behind us. Senator Ted Cruz, of course, the Republican from Texas, in conversation right now at Milken. Let's put an ear on this on Bloomberg TV and radio.
And so the answer to that, the answer to more socialism, is more capitalism. And starting on July 4th of this year, we signed it into law July 4th last year. Starting July 4th, on the 250th anniversary of America, because of this spirit up here. And by the way, it's also bipartisan. There is a lot of support on both sides. As Mike Liddell says, this isn't a red issue or a blue issue. This is a red, white, and blue issue for preserving the future of America. But starting on July 4th, we're going to have, I think, at least 10 million kids. Today, we're at about 6 million kids who are going to be lighting up these accounts. They're going to see on that day, they own a little bit of NVIDIA, a little bit of Microsoft, a little bit of Walmart. They're in the game. And starting in 2027, all 3.7 million children born, when they get their Social Security number, will get an investment account at birth. It will be undeniable that they're in the game. We're going to wrap financial literacy around that, civic literacy around that. So it is the biggest change to the social contract in America in 50 years, right? It will be bigger in 15 to 20 years than Social Security. We're going to move trillions of dollars of wealth into the pockets of Americans who compound in the upside of SpaceX and OpenAI and Anthropic. And that's a way to do it aligned with capitalism, not at odds with capitalism. If you attack all the capitalists in California, which, by the way, we're going to defeat the wealth tax in California, but if you attack innovation and entrepreneurship and capitalism, we become Europe. That's not the path forward for this country. We're going to defeat that at the same time, getting everybody into the game. And it's not just this, the great work of Alexander von Furstenberg and Teresa and Kevin and Mike on, the Trump IRAs is another component of this. We have to get, raise the floor for everybody. This is the way to do it. We can't just be against wealth taxes, Mike. This is what everybody's going to see on their phone on July 4th. You've received $1,000. You see the actual shares. So imagine moms and dads who have never owned a single stock in their life, who are anxious about their kid's future because of AI, are going to open this up and say, my kid has a shot. I'm going to add 10 or 20 bucks to that. Michael Dell's going to give $250 to that. Thousands of companies in America are going to contribute to that, right? That's the way we change America.
So, Kevin, you and I have joked over the last few years. We gave you an office at the Milken Institute with a nice window looking at the Treasury and the White House. Try to make it really attractive, but you decided to go across the street. But as Brad pointed out here, you and Bob Shapiro, who worked under Clinton, had a bipartisan effort and wrote the legislation that is about to become a reality here. Can you talk to us for a moment on how it's going to work? If every one of us can give money to these accounts, how does it work?
Yeah, that's right. And just before I do that, I want to say something about the wealth tax, if I may. That if in the old Laffer curve space, if you had 100% tax on work, how much work do you get? Zero. Right? So it was like actually the first intuitive point that he made. When you take a wealth tax and you model it in an economic model, what you do is you estimate the capital income tax equivalent. So if I've got wealth, I get return on wealth. How much of that return is being taken? And it's widely accepted because of the great contribution of David Bradford, a Princeton economist who's sadly no longer with us, that you need to look at the risk-free rate. And so let's just say right now the risk-free Treasury 30-year rate is 5%. That means that a 5% wealth tax is the equivalent of 100% tax on capital income. And just as if you have 100% tax on wages, you don't get any work. If you have 100% tax on capital, you won't have any capital. Investment will stop if that wealth tax happens. And so, I think that thinking through the next steps for us, that we've got Michael Dell has decided, I think correctly, after studying what he should do with his wealth to have the biggest impact on the world after he's gone. And his people, his consultants said the best thing he could possibly do is take a little bit of it and give it to every kid in America. And I agree with that analysis. I 100% agree with that analysis. But I think that with the kids, what Alex von Furstenberg and I have been talking about, especially with Teresa Giarducci, who is that really brilliant lady that you just saw up on the screen at the start of the session, is that about half of Americans have a job where there's no one who provides a 401k for them, no one who does a match. And the interesting thing is that federal workers aren't really high-income people, and there are a lot of federal workers that are pretty low-income people, a lot of federal workers in Washington that are every race, and the TSP program, the Thrift Savings Plan for the federal government, it turns out we have the best evidence you could possibly have on how it works, because the CBO actually has confidential access to everybody's account and what their salary is and everything else. And the program is astonishingly successful at getting even low-income minorities who have a very low savings rate in the private sector to invest to the max and build wealth. And so if you want to look at the wealthiest low-income people in America, they're the people who had access to the program that the president just expanded significantly in the Oval Office this week. And so that's thing one. What we have to do next is expand it with legislation. The president called on Secretary Bessent and I, and of course we're going to work hand in hand with Senator Cruz to study how we can expand the Trump IRA so that it doesn't just affect people with incomes below $30,000. But one thing I want to make absolutely clear in the way that we wrote the language is that we have a really easily accessible website. So now people who aren't super financially literate, they can get an IRA like that. It's a government, TrumpIRA.gov. And that website is available to everybody. And if your income's below 30, you'll get your match right away. But we believe there's going to be runaway signing up for these things. And our expectation is that working with Congress, we're going to want to lift the limit from 30 to something a lot bigger than that.
So as we look, what is the cause? Why does the challenge is why when you look at the news or go online every day, to hear stories, whether they're
all right,
coming
folks,
out
you've been listening to a panel up on the big stage here at the Milken Institute Global Conference. I'm Carol Massar, along with Joe Mathieu, and we are live in Beverly Hills. Lots of conversations on many stages around here. I just want to highlight, so we just saw Ted Cruz, Kevin Hassett, Brad Gerstner of Altimeter, and we did see Senator Cruz telling moderator Mike Milken, of course, who created this event some 30 years ago. He says, Senator Cruz saying he has repeatedly nominated Gavin Newsom as the Texas Realtor of the Year. He says people are generally moving from the big blue states to big red states like Texas, and that it's 5 times more expensive to rent a U-Haul from Silicon Valley to Austin, Texas, than the reverse. So politics at play there.
Yeah, I mean, as we mentioned, half of Washington is here, and it's not just the lawmakers who are on recess. It's the administration populating this event. We spoke earlier with the Secretary from Housing and Urban Development, and that might parlay into our conversation ahead with Senator Angela Alsobrooks. The Democrat from Maryland is with us here in Los Angeles, teeming with not only names of finance, but politics.
Yeah, it's a great intersection. Do not go anywhere. Joe and I back right here on Bloomberg. All right, everybody. Yes, indeed. We are live here in Beverly Hills at the Milken Institute Global Conference. Carol Massar along with Joe Mathieu. We've got a great guest coming up. I want to set the scene here because we do have President Trump out there out on social, and he says Iran has taken some shots at unrelated nations with respect to the ship movement, Project Freedom, including a South Korean cargo ship. He says perhaps it's time for South Korea to come and join the mission. We've shot down several small boats, or as they like to call them, fast boats. It's all they have left other than that South Korean ship. There has been at this moment no damage going through the strait. He also mentions that the Defense Secretary Pete Hegseth and, of course, the Joint Chiefs of Staff, Dan Kane, they're going to be holding a press conference tomorrow. I mean, this has become, I hate to say it, the norm, but this conflict, again, we can't seem to kind of find our way out of it. And again, we'll get an update on where we are tomorrow.
Yeah, and this, of course, follows a weekend in which the president announced this new Operation Freedom. So with naval vessels standing by to help commercial vessels get through the strait, not Iranian vessels. And it's curious still to see what happens, and that might be the point of this Pentagon briefing tomorrow.
Right.
See how many actually take us up on this offer, and the president's still looking to build a coalition of the willing. It's a good place to start our conversation with the senator. Among the many attendees at Milken, Senator Angela Alsobrooks, the Democrat from Maryland, is with us here, and it's wonderful to have you back
Thank you.
on
Great
Bloomberg
to be
TV
here.
and radio. It brings us, of course, to energy prices first and foremost. We're ever closer to $4.50 a gallon on a national level. You might have noticed 6s and 7s on the signs going by here, and California's got its own story. In Maryland, it's slightly different. I'm wondering what it means for people living in your state and what they're not spending on as a result.
Well, you know what? It's not just people in my state. What we recognize is we are headlong in a war. I mean, I think what you just read demonstrates that we have no idea how to get out of the war. Furthermore, the cost of the war is being borne by everyday hardworking people. These gas prices, you think about energy costs, the cost of groceries, all of these various costs are being borne by working class people who don't have the option of not paying it. So, you know, it's a really distressing time for us. I think it's going to be really important for us to get out of this war soon. But the cost and the affordability crisis that we're seeing is real life. It is not theoretical. It is being borne by the people we know. I see it in the grocery stores. We see it all over, and it really
Well, how about for policymakers? You're on the banking committee. What's Kevin Warsh going to do? Does he still cut interest rates when he comes in?
Well, we'll see. I mean, part of the issue is that, you know, I did not vote to support Warsh, and it's because, you know, I couldn't be sure he would be independent. I think the independence of the Fed, we know, is very important. We know the two jobs there are to make sure that we are keeping down inflation and also protecting and growing employment. And to do that means we have to have a Fed that is independent, and he dodged questions that I would ask of him. And I think an independent Fed is going to be really, really important right now when people's lives and livelihood are literally on the line in a way that we've never seen before. You know, I'm the daughter of a receptionist and a car salesman, so I understand how challenging these times are for real people. And the people who make these decisions, they don't care about the cost of gas. They're driven around, you know, it's my colleagues and others. I mean, if we're honest about it, the people who are making these decisions are wealthy people. But the people who bear the cost of all of these decisions are everyday, hardworking, middle-class people.
Senator, we talk a lot about the K-shaped economy. We talk a lot about the gaps that we have in society. Do you blame President Trump for getting in the way of access to capital or affordability issues, or is the system really the problem? Because I think it's safe to say under multiple administrations we have these gaps.
Yeah, you know what, fair enough. I think that obviously it's been exacerbated. I think that's it by any objective measure. Our country now, I think the sentiment inside our country, if you look at polling and other numbers, Americans just feel like they are further and further behind. I think objectively...
Feel, or are they further and further?
It's both. They both feel like they're behind, and they objectively are. You think about every measurement we can think of. Home ownership, for example. My parents, when they married at 21 and 22, they could buy a home within 5 years of their marriage. The average age of a first-time home buyer in our country now is closer to 40 years old. Add to that, again, what you're talking about, the cost of just everyday living. I think that it's systemic. The reason I'm here at Milken is because I believe that there's a way for us to focus on creating wealth for people. People are tired of the whole, maybe we should live to get by, maybe we can make it so you can afford your groceries. There are pathways to wealth that I am interested in making sure that as we see this whole kind of digital revolution that's happening, I think we ought to be talking about wealth, not just getting by, wealth creation, generational wealth, and those things happen, of course, again, through home ownership and taking advantage of the whole digital revolution we're seeing.
You're coming at this from a governmental approach as a senator, but you came out here to Milken to talk to private enterprise as well. How does that factor into the solution? How do you get these people roaming the halls at Milken to help you achieve those goals?
Well, we recognize it's going to have to be a partnership between the federal government and the private sector to address so many of the long-standing, to your point, these are long-standing issues, systemic issues. I know it because I came to the Senate as an executive. As a matter of fact, I'm the only part of my Democratic class who didn't come from the House. I came there as an executive. I was county executive of my county where I had to rely on sometimes public-private partnerships. We did so to build cancer centers, to build schools, and to really get our economy going. And I think that same approach is going to be really important.
I love that you said that. I think the local level is something that gets so missed in reporting. I think we try to do it really deeply here at Bloomberg, but what's happening on the ground? Having said that, you are here at Milken. The financial presence, as you know, is a big one here. It is, trillions of dollars that are being managed globally. What do you want to say to especially a lot of billionaires who are pushing back, whether it's New York City or San Francisco, in cities that are fighting taxes and so on? I mean, what do you say to them?
Well, you know what?
Or who do you want to have a conversation with here?
Well, I think we should have a conversation with both. I mean, you're right. The billionaires are here. The government officials are here. The truth of the matter is that we should all be focused on making sure that we are creating additional pathways for more and more people to participate in the system. It makes us better. When we all do better, we all do better. So we're creating these pathways. And you know what? I'm here because I want to hear from all sides. Tell us how we can do it better. If you have some ideas about the ways that we can do things more cheaply, more effectively, how we can cut red tape, whatever we can do to make sure we're making a more robust kind of effort to include people in economic opportunity. I'm also here to listen. I have some ideas of my own, but you know what, to be effective, it means we're going to have to kind of listen to each other. And I'm here to implement those ideas in the Senate.
I spoke earlier today with the Secretary of Housing and Urban Development, who's at Milken as well. The administration is on the ground here, as we've been discussing. And he talked about the cost savings that came with his decision, the administration's move to eliminate the IECC, the energy efficiency mandate that was put in place by the Biden administration. You talk about red tape. He says this takes $30,000 off the cost of a home. Is that the kind of move that you would support? Is there common ground between the administration and Democrats on this? Or is it risky to eliminate energy efficiency right now?
I think that it's risky to eliminate energy efficiency. I mean, I think we all agree that we want to have more and more efficiencies. I think that there are some things that should be adjusted. It's the reason I'm on the Environment and Public Works Committee. We're looking at some of the permitting and some of the other things. In some instances, balance is a great word. I think balance is a great word. I'm looking for what the balance is. It reminds me of what my daughter said. She told me coming to the Senate, make sure you listen out for people who don't necessarily agree with you. Take up some space and find yourself at some tables having conversations where you can get to a real solution. Some of those are right in the middle. I think the fringes are where we've been hanging out. I think we're going to have to come more to the middle to find a balanced approach. Because again, as I've said, these are not theoretical conversations. If we're talking about home ownership and talking about ways that we can increase the housing supply and other things, energy efficiency is going to be important, but we also have to do so in a way that is reasonable, that's not burdensome, that doesn't slow us down or prevent us from reaching the goal of getting home ownership into the hands of more and more Americans, where we know, as a matter of fact, is where generational wealth is created. So we got to listen to each other, but the balance in it, I think, is where we should be.
A lot of wealth created in the crypto market, although it goes up and down, as we know. Let's talk about the crypto bill. Last Friday, you and Senator Tillis unveiled a compromise bill, so-called, got into stablecoin rewards. What's the progress on this, and when do you expect or anticipate a possible vote? And how do you deal with the ethics issue of an administration, a presidential family who has a lot of exposure investments in crypto?
So,
how do you do this
I think
fairly?
we've come a long way. I mean, I'm going to answer that question as well. But if you're asking where we are, Senator Tillis and I have done a lot of work to make sure that we are not only allowing innovation to grow, but protecting also many of the community banks that have been really important, making sure that deposit flight does not happen, that we're not allowing interest and yield to be paid solely on a balance, or that we're mimicking bank-like products without the protections of a bank. So we have been working on that, but also making sure that we are allowing innovation to grow. And we believe that I believe it's important for us to have regulated an industry that is already growing. We don't want America to be behind the rest of the world, where crypto is concerned, AI and other things. And so really being at the table to make sure we're negotiating. Having said that, you're right, there's some other issues. Illicit finance, ethics, these are issues that absolutely have to be addressed, and we're working with our colleagues. I know that on our side we have Senator Cortez Masto, Senator Schiff, and others who are working along in a bipartisan way to come up with some smart solutions so that ethics can be addressed. The larger public is...
But do the Republicans have those same concerns, those ethical concerns?
I think some do. I think that some do, not all, but I mean, similar to what we found on this banking issue and the interest issue. Yeah. Senator Tillis made a tremendous difference when he joined me in raising this as an issue, and we found in doing so that we have colleagues on either side who agree with us. So there are some Republicans who are concerned about the ethics issue and have said that they want to see it addressed, and I want to see it addressed.
There's nothing more powerful than a retiring Republican in the Senate right now. You're making friends with the right people. Senator, I'm curious. Look, our audience has really basic questions when it comes to clarity. Yeah. Is it going to pass, and is it going to happen this year? Because when you talk about it, you make it sound like there's still a pretty long road.
You know what? I think it can pass. I really do. I mean, I think we've come a long way. I hope so.
It's a full calendar.
We've had a lot of work. We've put a lot of work into this. I mean, we've been working tirelessly for months. What it will mean is we're going to have some compromise. I think everyone will walk away from the clarity table just a little unhappy, both the banks and the crypto industry.
What do you compromise on, though, potentially?
Well, you know what? We've compromised and said we want the innovation to grow, but we don't want to create bank-like products without the protections of a bank. You cannot pretend to be a bank-like product without the protections.
So is stablecoin yield the biggest holdup?
That was a big holdup.
We're still there, though, right?
I think we have. I think we've resolved the yield issue.
We did.
We have resolved the yield issue in a way that I think prevents evasion of the laws. Again, allows the innovation to grow. But we put some barriers in place that will allow both to be a little unhappy. But I think it's a way forward.
How does it create more access for wealth creation for a broader public?
Well, generally, what we see when we see these kind of revolutions, that we see that people who are underserved generally can't get in. The only people who can benefit from them are wealthy people. In this case, when we think about small businesses who, using, for example, a stable coin, can do transactions more quickly and more cheaply, this is a change. It is something that will allow businesses to grow and allow more and more people, I think.
How about for the debanked? That's where you're going here, right?
Yeah, I think for the underbanked, for the underbanked and the debanked, these are really game changers to allow more and more people to participate in a marketplace where they have been shut out before now. But again, we have to do so making sure we have the right regulation, that we have consumer protections in place, making sure we're protecting them. But for the underbanked and the debanked, this is a complete game changer to allow more and more people to get into the marketplace and to be able to participate and to make money.
I asked this of our last guest. I have no idea how much time we have because I can't hear a thing.
I think we're about 30 seconds out, so we'll keep it tight.
Number one question everybody wants to know from you, just quickly. People are
What are you
asking, what are
being
people
asked the
asking?
most
Yeah.
here?
Well, you know what? I think everyone wants to know what the way forward is. The people that I tend to serve are concerned about economic opportunity. They want to know what we're going to do to fix the place we are in our country where people are feeling really discouraged.
Yeah.
And I think it's by participating in things like this to work together to find those ways forward.
Great stuff. Thank you.
Senator,
That was
so
quick.
much. Angela Alsobrooks with us, the Democrat from Maryland, here at the Milken Global Conference in Los Angeles. We've got a lot more ahead, Carol.
It's just a reminder that business is getting done, whether it's down in D.C. or certainly across the country. And we do have a lot still coming up, continuing to talk about this cross-section of money with everything in our world. And I know a little bit later on, our TV colleagues are going to talk with the CEO of Chevron. So that should be an interesting
quite
conversation.
a day for that conversation here on Bloomberg. And we'll be doing this for the next several days here, of course, with the intersection of geopolitics. Well, I guess that is the intersection of politics and the economy, and that's exactly where we're going to be focused here. What do we have coming up next? Somebody can let us know?
I think. What are we doing next, guys?
All right.
I don't know.
That's, forgive me, I know where we're going. I mentioned him just a short time ago.
It's loud.
The Secretary of Housing and Urban Development, Scott Turner, sat down with us earlier today to talk about his initiatives to increase affordable housing. Let's listen. Questions about the housing market on this day that the 30-year Treasury tops 5%. This is a big deal for our audience. It's a big deal for a homeowner or anyone looking to buy a home. How much will interest rates be a challenge to what you're trying to do in increasing access to affordable housing?
Well, thank you so much. I think you see, the President Trump is laser focused on housing affordability. He's focused on keeping our country safe, from a regime having a nuclear weapon, but also laser focused here domestically to make sure that the Americans can achieve the American dream. And so as we see the fluctuation in interest rates, we're also, looking at the regulatory environment to bring down burdensome regulations to make it easier for builders to build and for buyers to buy. So I'm grateful for the president's leadership and that HUD. We're following that and encouraging localities to do the same.
You were pointing specifically to your rescission of the IECC.
Yes.
An energy efficiency requirement that the Biden administration put in place that you say added over $30,000 to building a home?
Yes, sir. So this is the final determination for 2024 during the Biden administration. Really, it's the International Energy Conservation Code. And it added up to $30,000 per project when builders are already building to these energy codes. And so we rescinded that to make it easier for builders to build, which will make it better for buyers to buy. On top of that, $100,000 in regulation and regulatory fees is added to the final price of a single-family home. That's not sustainable in our country. So we've been very focused on bringing down the regulatory environment, making it easier for builders to build, better for buyers to buy, and raising the supply in our country.
We're having a big conversation in America right now about affordability. We talk about it on the air all day, whether it's $4 a gallon gas, although where we are, you've probably seen, Mr. Secretary, it's above $6 in California, which is pretty wild. But the cost of everything from food to gas is an issue for Americans, making your mission that much more urgent, but also more difficult, no?
Well, like I said before, the president is laser focused on domestic policy. From the time he was campaigning to the time he came into office, he said, we're going to make it more affordable in America. And I know personally, being in the cabinet and knowing the president, working with him, that to be able to help Americans to afford to buy a home, to buy groceries, to buy medications is top of mind for the president. And so you see the actions that have been taken, the rescission of these regulatory environments, the taking down of burdensome regulations to help American people is a great priority for the president and myself. And so while it may seem to be difficult, we've made great strides, but there's still a lot of work to do.
We're out of time, Mr. Secretary, but how many houses can you build if you stay with President Trump for the remainder of this term? How many affordable units can you add in this country?
Well, we're going to add many, and in particular with opportunity zones, there's already been 400,000, so we want to duplicate that and do even more.
There you have the Secretary of Housing and Urban Development, Scott Turner, talking with us this morning here at Milken. And this is one of the big themes that we're going to be hitting. We just did Carol with the Senator, and that's affordable housing.
I got to say, I've got a panel today, later on, and tomorrow talking all about real estate. But tomorrow in particular, I've got the CEO of Lennar, big home builder, very successful, and curious to see what it means in terms of affordability. How do we get it? A lot of them say, government, back off. We can figure it out.
That's right. I'm going to be going to all of Carol's panels so I can learn something while I'm here the next couple of days.
Sure.
I've got a lot to learn. This is the mayor of Milken, after all. And, we've got the bureau chief from this great city of Los Angeles with us as well. Mayor John Gittleson is also here.
He's actually the mayor and knows a lot about real estate.
Mayor, welcome. It's nice to see you, John.
Good to be here.
And great to be in your fair city. We spent a lot of time today talking about the backdrop of this Milken and how different it is because of geopolitics, the war in Iran, the geopolitics of supply, and you're seeing a lot of different faces than you might, and the conversations are taking a different direction. Are you noticing that?
I am noticing that, we're looking for people talking about billionaires feeling very uncomfortable here in California.
Yeah.
There's a proposed wealth tax on billionaires on the ballot in November, so people are wary of that. And people are uncomfortable, I think, with what's going on globally with all the, military action in the Middle East. And then AI is also like causing people to try and figure out what's going on.
John, I love that you went there. And what's interesting, I think about the opener that was on the Bloomberg. It was all about private credit and this $1.8 trillion massive market and what everybody was going to say. And the last few years, as you know, was all about private credit. But we are talking more about geopolitics. And I know from my real estate panels, it seems like the only thing everybody wants to talk about, the big developers, is AI data centers. Like they're saying the money, the spend, it's still happening.
Yeah, well, there's still going to be people who want a roof over their heads.
Well, yes,
that's a big
course.
thing. The amount of money being spent on data centers is, they were talking at a panel I was on this morning, $1 trillion. They said there's going to be more investment grade debt issued this year than Treasury debt. $1 trillion in investment grade.
Get your head around that. That is crazy scale.
That was James Elter from Apollo who brought that up. And it's like, that's a lot of money. That's a lot of construction. It's a lot of construction jobs. But when those construction jobs go away, you're going to have like one guy manning the data center and a dog to make sure the guy doesn't, do anything wrong. So it's not
we
necessarily...
still need these massive data centers. There are some who think it'll be the size of a phone booth in a couple of years based on innovation, and we'll be stuck with these huge warehouses around the country. But what about not just the investment? That's Elon's plan, right? And they might either way, whether it's coming from a terrestrial or a space-bound data center, it brings disruption. When it comes to jobs, when it comes to communication, when it comes to efficiencies, what are you hearing about those here?
Well, I mean, California is a great illustration of like sort of the K-shape that's going on right now. San Francisco is booming because you got all this AI money just pouring in there. Southern California, Hollywood, is getting hit partly because of AI, because it's like they don't know what's going to produce what kind of entertainment, how people are going to consume it. But a lot of the sound stages and the places where people shot movies are not necessarily what you need right now. And production is changing. There's all these mergers and, consolidation within the industry. So while you've got booming AI in one part of the state, you've got another key to the California identity and economy that's like collapsing here. And then there's other stuff going on. I mean, Southern California aerospace is this like growing industry, and some of the like tech coders who are losing jobs in the Bay Area because AI is putting them out of work are moving down here to Southern California to program and engineer all different kinds of cheapo aerospace, whatever kind of Anduril type asymmetric warfare weapons we need to put together.
John, I got to say, I love talking to everybody, cab drivers, makeup artists, to get an idea of what's going on. And our makeup artist said there's no production happening here in LA. There's things happening. I see it in New York. I see it a lot. I live in Jersey City. I see a lot there. It's just interesting in terms of the dynamics. These economies definitely change. So.
Oh, yeah.
Thank you so much. Great setup. So much going on. John and the team, we've got this incredible live blog on the Bloomberg that just keeps track of it. I don't know how they do it, but they do it. John Gittleson, he's the LA bureau chief. You and I, we're going to wrap for the day, but you and I are going to be back here tomorrow.
That's correct. We'll be back here tomorrow, same time, same place, and I'll meet you here a little later on for the late edition of Balance of Power. Kaylee Lyons will be live in Washington, and we'll have much more conversation, including the chair of the CFTC. That's all coming up after 5 p.m. Eastern, but we got a lot to do between now and then, Carol.
And our TV colleagues are coming up. They've got got a great interview with the CEO of Chevron, and they're going to continue our coverage here at Milken. Bloomberg.
Welcome to our continuing coverage from the Milken Global Conference here in Beverly Hills, California. I'm Romain Bostick.
And I'm Katie Greifeld.
We got a lot to talk about today. Of course, this is a very sprawling conference here, more than 300 sessions. And a big topic in a lot of those sessions, Katie Greifeld, is energy.
It's hard to ignore, of course. You can see the reaction in markets today. And this is a story that, we've been coming to grips with over the past 2 months, and it just continues.
And absolutely, we came into today thinking that we were still in a ceasefire, thinking that we were making progress towards a reopening of the Strait of Hormuz. But you've seen the headlines, you've heard them here on Bloomberg television. And that conversation continues right now with the CEO of Chevron, Mike Wirth. Mike, great to have you here on the program.
Good to be here.
Of course, I have to start with the news of the day here. Whatever ceasefire that we did have in the Middle East, at least for right now, seems to have broken down. A lot of questions right now about just how prolonged this closure of the Strait of Hormuz will be and just how much it's going to affect the economy.
I think it's still difficult to say, Romain. It sounded as if there were plans to try to establish a transit corridor. Now we've got these reports that there have been some kinetic activity in the region. I've been in touch with our people that manage our shipping assets in the region, and we remain concerned about the security of transit. So, it seems like we still have some issues to work through.
You are no stranger to Washington. You've had a seat at the president's table more or less multiple times here. What would your advice be to the administration to try to bring this to some sort of conclusion?
Well, my advice to the president really relates to energy markets, not to diplomacy and negotiations. And, I've advised people in the administration that the buffers in the system that help ensure supplies are available to markets are being drawn down. And what that does is it creates more upside price pressure, potentially more volatility and more risk. And so I confine my discussions really to the energy system, not to diplomacy or the military side of things.
Fair enough. It is interesting, though. You think about where the U.S. sits in this. You look at net exports coming from the U.S. They've certainly increased. We saw that last week as well. But how long can that sort of continue and plug the gaps that we're starting to see in the global supply chain when it comes to energy markets?
Well, the U.S. is the largest producer in the world, and we've been exporting products, crude oil, gas, in growing quantities in recent years. And so it's a good thing for the world that the U.S. is able to help meet the need. That said, 20% of the world's energy supply flows through the Strait of Hormuz. That's oil, that's liquefied natural gas, it's refined products. Goes to Europe and Asia primarily, and both of those regions are seeing the impact of having that much cut off. The U.S. can't make up all of that supply. Inventories in the system are being drawn down, and the supply situation is tightening, and that's a concern.
And, you think about the U.S. and where we stand when it comes to production. That, of course, has insulated the U.S. consumer to some degree from some of the higher prices that we're seeing in Asia, that we're seeing in Europe. And I just wonder from where you're sitting, how long you think that will continue to be the case? Or, is the U.S. heading towards a situation where consumers are going to see the same sort of prices that we're starting to see in Asia?
Yeah, I think the real thing is the U.S. is not going to see supply outages. We're starting to see risks of supply outages in some of these economies. In Europe, you're seeing flights canceled and schedules reoptimized because jet fuel is getting very, very tight in Europe. We've seen a number of economies in Asia that have instituted policies to reduce demand because they're concerned about running out of supply. Countries like Australia that have shut down most of their refining capacity and are heavily dependent upon imports are taking measures to address that. So I think the U.S. is going to see the price pressures. It's a global market. These prices are set in global commodity markets, but the risk of supply outages in other parts of the world is much higher than it is here in the U.S.
I'm curious. I mean, Chevron has made some big investments in the Middle East in recent times here. Has the situation over the last couple of months disrupted any of that, changed your plans at all?
We've got some production in Kuwait and Saudi Arabia that has been slowed down as we don't have the ability to evacuate it out of the region, and storage is filling. So we've seen some reductions in rates of production. We produce natural gas offshore in the Mediterranean that supplies Israel, Jordan, and Egypt. Our facilities there are running at full capacity. We've got some petrochemical joint ventures in the region that are cut back in terms of their production. So we're feeling this. We're less exposed to the Middle East than some of our peers. And so on a relative basis, the impact on our company has been lower than it has been for some others.
It still cost you about $3 billion in the most recent quarter, a lot of the volatility that we've seen in this market. I am curious as to how you forecast going forward without necessarily being able to necessarily forecast, military diplomatic solution to all this.
Well, forecasting in a commodity business is always a challenge because we have to assume what commodity markets will do, and they surprise us. What we're doing now is really working with scenarios. And so we look at different scenarios for when things might resume to a more normal state, what that means for supply in the world, what it also means for demand, as you see demand adjustments. And so we can't predict what the price will be and what supply and demand will be. We're looking at a range of alternatives and trying to use those to inform decision making.
And Mike, we only have about 30 seconds left with you, but do you have any plans to increase production in places such as the Permian, such as Argentina, as we talk about these supply shortfalls?
Yeah, we're up quarter on quarter, same quarter last year, 500,000 barrels a day. So we are growing. Our plans are to grow 7 to 10% globally this year. Demand is growing about 2%. So we're investing to grow at a rate greater than global demand is, and those supplies are sorely needed in the market.
Mike, really appreciate you taking time for us. I know you're busy. Absolutely. Mike Wirth there, the CEO of Chevron, live from the Milken Conference here in Beverly Hills, California. I'm Romain Bostick.
I'm Katie Greifeld.
Stick around. We have a lot more coming up here with our special extended coverage here from the Milken Conference right here on Bloomberg.